Question 1. Real property law and legal concepts. Which of the following best describes the difference between joint tenancy and tenancy in common in real property ownership? A. Joint tenancy involves equal shares and the right of survivorship, while tenancy in common allows unequal shares without the right of survivorship. B. Joint tenancy allows for unequal shares with the right of survivorship, while tenancy in common involves equal shares and the right of survivorship. C. Joint tenancy and tenancy in common both involve equal shares with the right of survivorship. D. Joint tenancy allows for unequal shares without the right of survivorship, while tenancy in common involves equal shares with the right of survivorship. Answer A. Explanation. Joint tenancy. This form of property ownership includes the right of survivorship, meaning that upon the death of one joint tenant, their interest automatically passes to the surviving joint tenants. All joint tenants hold equal shares. Tenancy in common. Each tenant in common holds an undivided interest in the property, which can be equal or unequal. There is no right of survivorship. Upon death, their share passes to their heirs or as directed in their will. Relevant law rule. The principles governing joint tenancy and tenancy in common are derived from common law and are codified in various state statutes. In Georgia, O.C. GA SS 446100 governs joint tenancy and tenancy in common. Question 2. Title insurance policies. What is a key difference between standard coverage and extended coverage in a title insurance policy? A. Standard coverage includes protection against all defects in the chain of title, while extended coverage excludes certain title risks not covered by standard policies. B. Extended coverage offers protection against defects in the chain of title and additional risks not covered by standard policies, including some off-record risks. C. Standard coverage provides coverage only for property defects that are discovered during the title search, while extended coverage includes risks that may be discovered later. D. Extended coverage is only available for commercial properties, whereas standard coverage applies to residential properties. Answer B. Explanation. Standard coverage typically covers risks such as defects found in the public records, fraud, and some claims based on the title history. Extended coverage includes all the protections of standard coverage, but also covers additional risks such as off-record defects, e.g. zoning issues, unrecorded easements that are not discovered through a standard title search. Relevant law rule. ALTA, American Land Title Association, provides guidelines and standards for both standard and extended coverage, outlining the scope of protection provided under each type of policy. Question 3. Scenario-based question. Scenario. Mr. Thompson is purchasing a residential property and has received a title commitment from the title company. The commitment lists several exceptions in Schedule B, including a long-standing easement for a utility company and a claim from a neighbor regarding a boundary dispute. What should Mr. Thompson do to ensure he is adequately protected before closing? A. Proceed with the purchase without addressing the exceptions, as they are standard in title commitments and do not need further action. B. Request that the title company remove the exceptions from Schedule B or provide an indemnity against the boundary dispute claim. C. Accept the exceptions as listed, but ensure that the easement is documented in the property records and the boundary dispute is resolved by a surveyor before closing. D. Cancel the transaction due to the exceptions listed in Schedule B, as they indicate potential issues with the property's title. Answer. C. Explanation. Exceptions in Schedule B. Schedule B lists exceptions to coverage, which may include existing easements and claims. It is essential to understand these exceptions. Easement. Ensure that the easement is properly recorded and does not interfere with your use of the property. Boundary dispute. Address the dispute by having a surveyor verify property boundaries to resolve any potential issues before closing. Relevant law rule. According to title insurance regulations, Schedule B exceptions must be reviewed thoroughly. Title commitments provide insight into potential issues that could affect ownership, and it is essential for buyers to address these with their title company to ensure clear title alter guidelines. Question 4. Title searches and examinations. What is the primary purpose of an abstract of title in a title search? A. To summarize the legal descriptions and boundaries of the property for tax purposes. B. To provide a chronological history of property ownership, including any defects or encumbrances. C. To list the financial obligations of the property owner, such as mortgages and liens. D. To offer a detailed survey of the property's physical condition and improvements. Answer. B. Explanation. Abstract of title. This document summarizes the history of property ownership and all recorded interests, including liens, mortgages, and easements. It helps identify any issues or defects in the title that may affect ownership. Purpose. The abstract provides a comprehensive view of the title's history, crucial for assessing potential risks and ensuring clear ownership. Relevant law rule. The role of the abstract of title is guided by practices outlined by title insurance companies and real estate law, ensuring thorough review of title history. Question 5. Title insurance regulations and compliance. Which federal regulation specifically requires lenders to provide a detailed disclosure of settlement costs and fees to borrowers? A. Dodd-Frank Act. B. Real Estate Settlement Procedures Act, RISPA. C. Truth in Lending Act, TILA. D. Fair Credit Reporting Act, FCRA. Answer. B. Explanation. RESPA, Real Estate Settlement Procedures Act, requires lenders to provide borrowers with a good faith estimate, GIA, and a HUD-1 settlement statement or closing disclosure detailing all settlement costs and fees. Purpose. This regulation ensures transparency and allows borrowers to understand and compare costs associated with their mortgage transactions. Relevant law rule. RESPA, enacted by the Consumer Financial Protection Bureau (CAB), mandates detailed disclosures to protect consumers in real estate transactions. Question 6. Title insurance underwriting. When evaluating a title defect, what is a common underwriting response to an unrecorded deed discovered during the title examination? A. Ignore the unrecorded deed as it does not affect the title. B. Include the unrecorded deed as an exception in the title policy and proceed with the underwriting process. C. Require the seller to record the deed before proceeding with the title policy issuance. D. Provide a limited title policy that excludes coverage for the unrecorded deed. Answer. C. Explanation. Unrecorded deed. An unrecorded deed can create potential issues for the title. It is crucial to address it before issuing a title policy. Underwriting response. The typical response is to ensure that any unrecorded deeds are properly recorded to avoid future disputes or claims. Relevant law rule. Title insurance underwriting practices follow guidelines set by ALTA and state regulations to ensure all title defects are addressed before policy issuance. Question 7. Title commitments. Which component of the title commitment outlines the specific exceptions and exclusions from coverage? A. Schedule A. B. Schedule B. C. Schedule C. D. Schedule D. Answer. B. Explanation. Schedule B. This section of the title commitment lists all the exceptions and exclusions from coverage, such as easements, liens, and other issues that could affect the property. Importance. Understanding Schedule B is crucial for identifying potential risks that are not covered by the title insurance policy. Relevant law rule. ALTA guidelines provide the structure for title commitments, including the details required in each schedule. Question 8. Title insurance policies. In which situation would an endorsement to a title insurance policy be most commonly used? A. To update the property's legal description after subdivision. B. To provide additional coverage for a known defect not included in the standard policy. C. To change the beneficiary of the policy after the property is sold. D. To adjust the premium amount due to changes in the market value of the property. Answer. B. Explanation. Endorsement. This is used to modify or add coverage to a standard title insurance policy, addressing specific risks or defects not covered by the basic policy. Purpose. Endorsements tailor the policy to meet unique needs of the property or transaction. Relevant law rule. ALTA endorsements are designed to address additional risks or provide specific coverage extensions beyond the standard policy terms. Question 9. Closing and settlement procedures. Which document is used to verify the distribution of settlement funds and ensure all financial obligations are met at closing? A. Closing disclosure. B. Abstract of title. C. Title commitment. D. Escrow agreement. Answer. A. Explanation. Closing disclosure. This document details all financial transactions associated with the closing, including disbursement of funds, payoffs of liens, and settlement costs. Function. It ensures transparency and accuracy in the final settlement of the real estate transaction. Relevant law rule. The closing disclosure is required by RESPA and the Dodd-Frank Act to provide a clear breakdown of all costs and transactions involved in the closing process. Question 10. Ethics and professional responsibility. What is a primary ethical consideration for title insurance professionals when handling sensitive client information? A. Sharing information with colleagues to expedite transactions. B. Ensuring all client information is stored securely and only accessed by authorized personnel. C. Using client information for marketing purposes with their consent. D. Disclosing client information to third parties if it is in the public interest. Answer: B. Explanation. Confidentiality. Title insurance professionals are required to handle client information with the utmost confidentiality and ensure it is protected from unauthorized access. Ethical standards. This principle is critical to maintaining trust and integrity in title insurance transactions. Relevant law. Also, principles of ethical conduct and state privacy laws require title insurance professionals to safeguard client information. Question 11. Specialized areas in title insurance. How does title insurance for new construction differ from title insurance for existing properties? A. Title insurance for new construction is not available as it is considered unnecessary. B. Title insurance for new construction often includes coverage for defects related to the construction process, such as liens from contractors. C. Title insurance for new construction is limited to covering only structural defects, excluding title issues. D. Title insurance for new construction provides the same coverage as for existing properties, with no additional considerations. Answer: B. Explanation. New construction. Title insurance for new construction often includes coverage for risks associated with the construction process, such as contractor liens and disputes over construction contracts. Existing properties. Coverage generally focuses on the history of ownership and recorded interests. Relevant law. Title insurance policies for new construction address unique risks and provide protection specific to issues arising during the construction phase. Question 12. Fundamentals of title insurance. Which of the following best explains why title insurance is considered a form of risk management for property ownership? A. Title insurance protects against financial loss from defects in the title that were known before the policy was issued. B. Title insurance provides coverage for any property defects discovered after the title policy is issued. C. Title insurance manages the risk by covering losses from defects that were not discovered during the title search and were not excluded from coverage. D. Title insurance only covers losses related to physical damage to the property rather than title defects. Answer: C. Explanation. Risk management. Title insurance is designed to protect property owners and lenders from financial loss due to title defects that were unknown at the time the policy was issued. It provides coverage for defects that were not uncovered during the title search and that are not listed as exclusions. Coverage. The insurance helps manage the risk of unforeseen title issues that could affect ownership. Relevant law. Rule. ALT8 guidelines specify that title insurance policies provide protection against unforeseen title defects and do not cover issues known prior to policy issuance. Question 13. Real property law and legal concepts. What is the effect of an easement on the title of a property? A. An easement creates an ownership interest that can be sold independently of the property. B. An easement grants a non-owner the right to use a portion of the property for a specific purpose, which can affect the title by limiting the owner's use. C. An easement changes the property's zoning classification and requires a new title search. D. An easement is a temporary right that automatically expires after a set period. Answer: B. Explanation. Easement. An easement allows a third party to use a portion of the property for a specific purpose, e.g. utility access, and can affect the property's title by limiting the owner's full use of the property. Impact on title. Easements are recorded and considered part of the property's title, which can affect its marketability and value. Relevant law. Easements are defined and regulated under state real property laws and are recorded in public records to ensure they are reflected in the property's title. Question 14. Title searches and examinations. What is the primary role of a title examiner in the title search process? A. To conduct a physical inspection of the property and verify its condition. B. To review public records and documents to identify any defects or encumbrances affecting the title. C. To negotiate with parties involved to resolve title disputes before policy issuance. D. To provide legal advice to the buyer on the property's investment potential. Answer: B. Explanation. Title examiner. The primary role is to review public records and documents to uncover any issues or defects in the title, such as liens, encumbrances, or claims that could affect ownership responsibilities. The examiner ensures that the title is clear and that any potential issues are identified and addressed before issuing a title policy. Relevant law. Rule. Title examination follows ALTA standards and state regulations to ensure a thorough review of title history. Question 15. Title commitments. In a title commitment, what information is typically provided in Schedule A? A list of all known defects and encumbrances on the property. B. The legal description of the property, the parties involved, and the proposed insured amount. C. Exclusions from coverage, including unrecorded interests and potential title risks. D. The procedures for resolving title disputes and handling claims. Answer. B. Explanation. Schedule A provides essential details such as the legal description of the property, the names of the parties involved in the transaction, and the amount of coverage to be insured. Function. This schedule sets the stage for understanding what will be covered under the title policy and the details of the transaction. Relevant law rule. ALTA guidelines outline the required components of title commitments, including the details provided in Schedule A. Question 16. Title insurance policies. Which type of title insurance policy is most likely to cover risks such as zoning violations or encroachments? A. Standard coverage. B. Extended coverage. C. Lender's policy. D. Owner's policy. Answer. B. Explanation. Extended coverage. This policy type includes additional protections beyond standard coverage, such as risks related to zoning violations and encroachments which are not typically covered by standard policies. Scope of coverage. Extended coverage is designed to address a broader range of potential title defects and risks. Relevant law rule. ALTA guidelines specify the differences between standard and extended coverage, including the additional risks covered by extended policies. Question 17. Title insurance regulations and compliance. Which state regulation is specifically aimed at ensuring title insurance companies comply with market conduct standards? A. ALTA standards. B. RE, SPA. C. State Insurance Department regulations. D. Dodd-Frank Act. Answer. C. Explanation. State Insurance Department regulations. These regulations ensure that title insurance companies adhere to market conduct standards, including fair practices, transparency, and consumer protection compliance. State insurance departments oversee and enforce these regulations to maintain industry standards. Relevant law rule. Each state has its own insurance department regulations governing market conduct for title insurance companies. Question 18. Closing and settlement procedures. What is the purpose of a closing protection letter (CPL) in the closing process? A. To guarantee that the property is free from any legal disputes. B. To protect the lender or buyer against losses due to errors or fraud by the closing agent. C. To provide a final summary of all settlement costs and fees. D. To confirm the recording of the property's deed and other documents. Answer. B. Explanation. Closing protection letter (CPL) provides protection to the lender and or buyer against losses resulting from errors or fraud committed by the closing agent, ensuring the integrity of the closing process. Purpose. The CPL serves as an additional layer of security for parties involved in the transaction. Relevant law rule. CPLs are used in the title insurance industry to provide added protection during the closing process. Question 19. Claims handling in title insurance. Which of the following best describes the process of handling a title insurance claim? A. The title insurance company immediately pays out the claim without further investigation. B. The title insurance company investigates the claim, determines the validity, and then decides on compensation or defense. C. The policyholder must resolve the claim independently and seek reimbursement from the title insurance company. D. The title insurance company only covers claims if they are reported within a year of the policy issuance. Answer. B. Explanation. Claims handling. Title insurance companies investigate claims to determine their validity and then decide on compensation or legal defense based on the findings. Process. Proper handling involves assessing the claim's legitimacy and providing appropriate remedies or defense. Relevant law rule. Title insurance policies outline the claims process, including investigation procedures and coverage terms. Question 20. Ethics and professional responsibility. What is an example of a conflict of interest in title insurance transactions? A. A title agent provides a discount on services to a loyal client. B. A title insurance company hires a real estate agent who frequently refers clients to them. C. A title professional discloses all potential conflicts of interest to clients and seeks their consent. D. A title professional accepts a gift from a client as a token of appreciation. Answer. B. Explanation. Conflict of interest. A conflict arises when a title insurance company hires a real estate agent who has a financial interest in the transaction and frequently refers clients to the company. This could lead to biased recommendations and potential ethical issues. Ethical standards. Title professionals must avoid conflicts of interest and ensure transparency to maintain professional integrity. Relevant law rule. Alters ethical principles and state regulations address conflicts of interest and require disclosure to avoid compromising professional conduct. Question 21. Specialized areas in title insurance. What special considerations are involved in title insurance for agricultural property? A. Agricultural property titles are not subject to any special considerations and follow standard title insurance practices. B. Title insurance for agricultural properties often includes coverage for specific issues such as water rights and agricultural liens. C. Agricultural property title insurance focuses primarily on environmental regulations and zoning changes. D. Title insurance for agricultural properties provides coverage exclusively for mineral rights and land use restrictions. Answer. B. Explanation. Agricultural property. Title insurance for agricultural properties includes considerations for specific issues such as water rights, agricultural liens, and farming-related encumbrances. Special coverage. These factors are unique to agricultural properties and require specialized coverage. Relevant law rule. Title insurance policies for agricultural properties address issues specific to farming and land use, reflecting the unique needs of this type of property. Question 22. Real property law and legal concepts. Which type of property ownership allows for the automatic right of survivorship, meaning the surviving owner S automatically inherit the deceased owner's share? A. Tenancy in common. B. Joint tenancy. C. Fee simple absolute. D. Tenancy by the entirety. Answer. B. Explanation. Joint tenancy. This type of property ownership includes the right of survivorship where the surviving joint tenants automatically inherit the deceased tenant's share of the property. Other types. Tenancy in common does not include the right of survivorship, and tenancy by the entirety, which is only available to married couples, also includes a right of survivorship but is not mentioned in the choices as an option. Relevant law rule. Georgia property law allows for joint tenancy with right of survivorship, distinguishing it from other forms of property ownership. Question 23. Title searches and examinations. When performing a title search, which of the following documents is most likely to reveal a previously unrecorded lien against the property? A. Abstract of title. B. Deed of trust. C. Mortgage note. D. Title insurance policy. Answer. A. Explanation. Abstract of title. This document provides a comprehensive summary of all public records related to the property, including any unrecorded liens or encumbrances. Other documents, while a deed of trust and mortgage note are related to financing, they do not typically reveal unrecorded liens. The title insurance policy summarizes coverage, not specifically in details. Relevant law rule. Title searches include reviewing an abstract of title to ensure all encumbrances are identified before issuing a policy. Question 24. Title commitments. Which section of a title commitment details the specific exceptions to coverage, such as existing easements or liens? A. Schedule A. B. Schedule B. C. Schedule C. D. Schedule D. Answer. B. Explanation. Schedule B. This section lists the exceptions to coverage, including easements, liens, and other encumbrances that are not covered by the title policy. Other schedules. Schedule A provides basic information about the property and the parties involved, while other schedules are not standard components of title commitments. Relevant law. ALTA standards require Schedule B to detail exceptions to coverage, ensuring transparency about what is not covered by the policy. Question 25. Title insurance policies. What is the main difference between a standard title insurance policy and an extended coverage policy? A. Standard policies cover only legal issues, while extended policies cover physical defects. B. Standard policies offer coverage only for issues discovered before the policy is issued, while extended policies also cover post-policy discoveries. C. Standard policies include all types of endorsements, whereas extended policies do not include any endorsements. D. Standard policies are generally more expensive than extended policies due to their broader coverage. Answer. B. Explanation. Extended coverage provides broader protection than standard policies, including coverage for issues not discovered during the title search but that arise later. Standard coverage typically covers only defects known or discovered before the issuance of the policy. Relevant law rule. ALTA guidelines differentiate between standard and extended coverage based on the scope of protection provided. Question 26. Title insurance regulations and compliance. Under the Real Estate Settlement Procedures Act, RESPA, what must a title insurance company provide to the borrower before the closing of a real estate transaction? A detailed history of the property's title. B, a good faith estimate of settlement costs. C, an appraisal report of the property. D, a detailed title abstract. Answer. B, explanation. Good faith estimate. RESPA requires title insurance companies to provide a GFE, which outlines the estimated costs of settlement services, including title insurance premiums. Other documents, appraisal reports, and detailed title abstracts are not required by RESPA but may be part of the closing process. Relevant law rule. RESPA mandates the provision of a GFE to ensure transparency and prevent surprises regarding settlement costs. Question 27. Title insurance underwriting. Which factor is least likely to be considered by a title underwriter when assessing risk for a commercial property? A, the property's zoning classification. B, the historical use of the property. C, the personal credit history of the property owner. D, existing environmental hazards or contamination. Answer. C, explanation. Credit history. Title underwriters generally focus on property-specific factors such as zoning, historical use, and environmental issues rather than the personal credit history of the property owner. Risk assessment. Factors related to the property's legal status and potential risks are more relevant for underwriting decisions. Relevant law rule. Title underwriting guidelines emphasize property-related risks rather than personal financial information. Question 28. Closing and settlement procedures. What is the primary purpose of a HUD-1 settlement statement in a real estate transaction? A, to provide a detailed analysis of the property's market value. B, to outline the terms of the loan agreement between the lender and borrower. C, to disclose all costs and fees associated with the closing, ensuring transparency. D, to verify the legal ownership and encumbrances on the property. Answer. C, explanation. HUD-1 settlement statement. This document provides a comprehensive breakdown of all costs and fees associated with the closing, ensuring that both parties are aware of and agree to the financial aspects of the transaction. Other functions. The HUD-1 does not cover property valuation or loan terms, but focuses on closing costs. Relevant law rule. RESPA requires the HUD-1 settlement statement to ensure transparency in closing costs. Question 29. Claims handling in title insurance. If a title insurance claim involves a dispute over a previously undisclosed boundary line, what is typically the first step taken by the title insurance company? A, pay out the claim immediately to resolve the dispute. B, conduct an investigation to determine the validity of the claim and assess potential coverage. C, contact the property owner to negotiate a settlement without further investigation. D, revoke the policy and issue a new one with updated boundary information. Answer. B, explanation. Investigation. The title insurance company will first investigate the claim to determine its validity and assess whether the claim is covered under the policy before deciding on compensation or resolution. Process. Immediate payment or revoking the policy without investigation would not follow standard procedures. Relevant law rule. Title insurance claims handling procedures include thorough investigation and validation of claims. Question 30. Ethics and professional responsibility. What action should a title insurance professional take if they discover a potential conflict of interest in a transaction? A, ignore the conflict if it seems minor and proceed with the transaction. B, disclose the conflict to all parties involved and seek their informed consent. C, continue with the transaction but make a note of the conflict in the transaction file. D, resign from the transaction to avoid any appearance of impropriety. Answer. B, explanation. Disclosure. Title insurance professionals must disclose any potential conflicts of interest to all parties involved and seek their informed consent to maintain transparency and ethical standards. Professional conduct. Ignoring or merely noting the conflict does not meet ethical guidelines. Relevant law rule. ALSA's ethical principles require full disclosure of conflicts of interest to ensure transparency and maintain professional integrity.